right, everybody. Stocks by the numbers, welcome back. And I wanted to do just a quick update here, just speaking about two brand name companies that pay us dividends that have rebounded, climbed, hit new highs here, both of them today. And the Dow has obviously been climbing very nicely here, basically approaching 42,000, hitting these new highs. NASDAQ tech across the board taking a big hit today, down about 3%. And we can see that a lot of brand name tech stocks like our AMDs taking big chunks down here, about 10% and change. Even DraftKings getting brought down here over 3.5% on the NASDAQ sell-off. But this is why I always say that you can't have all your eggs in one basket, right? And even if you're a young active trader and you're dealing with a couple of $1,000 and you're trying to find a lot of these nice quick option trades and trying to make several hundred percentage gains so you can quickly jump up to 10, 20K. I appreciate where you're coming from and I respect the grind. But at the end of the day, I just want to let everyone know I started this channel for a reason, and I do not claim to be a financial genius, but I have made a lot of mistakes when I was younger at that time, and I don't exactly have what I feel personally I could have accumulated by now at this point in my life. So the main point I'm driving home is, learn from others' previous past mistakes, learn from your own past mistakes. And if you're constantly trying to time, weekly or 2 weeks out, if you're constantly trying to time these option plays and they're just kind of like hit and miss and you're slowly bleeding your account, whether you love it and you know it's possible to make money, you may just have to alter the strategy a little bit. And that's why I always speak about brand name companies like Philip Morris and Campbell Soup, which we're going to get into. And this is why I say that, in my opinion, you should always try to take a chunk of your capital and keep it in longer term investments that are going to pay you dividends while you keep it parked there. Uh, you know, Income funds, growing ETFs that are going to just slowly grow your money over time while you're still working or running your business, right? This is how people really amass wealth. Several hundreds of thousands, several millions of dollars, by the time they reach middle-aged, older age, and they're at that, retirement area in their lives. So this is why I always keep bringing these companies to your attention. And Philip Morris, just a very quick update here, because we did speak about this one recently. And I know, shout out to a couple of people in the Discord. Again, Discord link in the description of every video, free for you guys to join. And we spoke about Philip Morris, and I kept mentioning in the Discord, when I like stocks in the long term, I try to update, in my opinion, in the Discord and just let people know where I feel that it's at a discounted price, or also if it's a stock that everyone's pretty hyped about, I'll try to update people daily as the stock continues to climb and hit new 52-week highs. Companies like Rolls-Royce, when it was really on fire. I know it's been kind of quiet lately, but we all know, sometimes it goes quiet, it goes under the radar, and then boom, that's when it pops again. So only time will tell. But Philip Morris here, right? Ticker symbol PM. This one, in my opinion, is really just an all-around great company. And obviously, it started out as a tobacco company, then they moved into the Zyn, they got the pouches, and now they're talking about, other, smoke-free products, So what we're seeing here is we're seeing a company that's adapting, right? They're adapting to the demographic and the world around them. And you have people, of course, that are more old school and they say, listen, I don't care what's going on. I'm a smoker. I'm going to still buy my cigarettes. I like to smoke cigarettes. Okay, fine. Obviously, you can do whatever you want. And on the flip side, you have people who, of course, would like to smoke, but they don't want to start. They feel it's unhealthy. So now you have these smoke-free options. I know a lot of people who weren't even smokers who started buying those in pouches and whatnot, right? So, if you come out with a product that can kind of have a little advantage and add a little bit of value to people's lives, whether it gives them more energy, more focus, right? Relieve stress, whatever it is, then, chances are you're going to see consistent sales. But going off on a tangent here, we looked at PM, it was down here, and I tried to let everyone know on the way down, hey, listen, PM's, in the low 90s. In my opinion, I like it. PM sub 90, in my opinion, I like it. We're at the bottom of this long-term support trend line here. Stock was down here, 88, high 87s. And then from that point, you can see this is mid-April, right? So we're talking just in the last 90 days, stock went from about 88 today, hitting new 52-week highs, almost hitting $109 a share. So that's a clean 25% move over the last 90 days, and they pay you a dividend to own it in the meantime. This is why, in my eyes, I like this as a long-term investment. I think we can even make the argument here after this run-up that even if you want to say the stock is fairly valued, excuse me, if revenue is consistent and is going to remain stable and steady, then even if it doesn't continue to climb, it should, in theory, at least kind of maintain this value. And this is what you see with PM even before this breakout. When I used to speak about the stock, you know, you had kind of these lulls down into the high 80s, the low 90s, and then it would rebound and climb back up to 98, 99, 101. Then it would pause, and then it would start to sell off again back to 92, right? And then it would bounce to like 96. So it was staying in that range. And that's why I say a situation like that, in my opinion, all those dips, you know, when you have cash on hand, that's when you continue to accumulate shares, build a position. Because again, a company like this paying a dividend yielding, again, look at this dividend yield here, 4.9%. That's with the stock up here at highs, 4.9%, right? When we were looking at it down here, I mean, we're talking about 5.5, almost 6% dividend yield. So of all the companies out there, I know a lot of them are boring and a lot of people don't like to play the long game, but something like Philip Morris, in my opinion, very, very nice stock to own a piece of. And you can see that it has these dips, it goes on these nice rebounds. People like it because it's a brand name, it pays a good dividend. Even now after the run up, look at the PE sitting there at 20. So that's what I mean. Technically, it's still not overextended in my opinion. But of course, after a big run up, it could sell off. But I just wanted to update and show you guys when we talk about the Buffett strategy, right? Because of course, before Nancy Pelosi and all of these senators who miraculously became financial whizzes in the market, right? Before all of that nonsense happened, we had Warren Buffett, who single-handedly the most successful investor, right? So if someone like that with a proven strategy, excuse me, if someone like that with a proven strategy comes out and says, yeah, listen, I look at companies like, McDonald's, Coca-Cola, these are brand name companies, stable businesses, names that everyone knows, loyal customers, right? Repeat customers. And basically what I do is I watch the stock, and then when it sells off and it really drops down in value, that's when I start building a position because I'm confident that it's going to rebound in value, and longer term over the next upcoming years, it's going to continue to increase in value. And of course, most importantly, they pay me to hold it the entire time. So if someone lays out a strategy like that for you and they've made billions and billions of dollars, then in my opinion, you'd be kind of foolish not to follow that sage advice, right? So something like PM, great company in my opinion. And also we can see that yesterday, Philip Morris expands U.S. operations with $600 million Colorado plant. And I also mentioned a while back, but I continue to remind everyone that a lot of these companies, these American-based brand name companies, we're talking about a lot of reinvestments into domestic plants and facilities. I mentioned Intel, like a week or two ago, and I'm bringing this back to your attention because we're in an election year, right? And I know Trump is like the America First candidate, so if he happens to become president again, this is why I said, in my opinion, during the election year, if it appears like Trump may get back in the White House, he always talked about America First, reinvesting into America. So companies like Philip Morris, trading at a discount for the longer term, now they're reinvesting several hundreds of millions back into a plant here domestically in the state. In my opinion, those are the types of companies you'd like to own in this environment. But switching over to stock charts very quickly, and I just want to show that the RSI now a little overextended on PM, right? It's up here at 76, so we could start pausing a little bit. We had on this big pop-up and breakout, we have the trumpeting now of the Bollinger Bands, right? And now we've seen in the past that now once we have the trumpeting and we widen, sometimes, we calm down, we kind of just flatten out and just kind of consolidate, and then this bottom Bollinger Band is going to curl, and come up, and then you might have like a break, and then it starts to climb again, so we know that these stocks they get hot and then they cool down, And this is quite a big run up here in the last couple of months. So if it starts to pull back to, something like 102.60 and retest the mid Bollinger Band, in my opinion, it would make sense. It would be justified. But RSI potentially a little overextended. Look at that 50-day moving average now over the same time frame. Goes basically from the sub 90 level up to above 100 now, almost 101 here at 184. So that's a good support level there in my eyes. And we had the MACD recently crossed to the upside. Obviously, stock started flying. So we could have a little bit of cooling taking place. But PM, just a great call here. And on the longer time frame as well, on the weekly, we can see RSI up here at 75. Stock basically rejecting right here at the top Bollinger Band. 108.81, top Bollinger Band 108.54, and then you can see we closed below it. So that's why I'm saying, like we spoke about with a stock like ASTS, right? It's being kept up. People are still buying into it. But when you have the big spike ups like that, you see the big drop off sometimes where it'll give back, 60, 70, 80% of that big move before it flattens, consolidates, and then potentially takes that next leg higher, right? So we could see a little bit of cooling with PM, but just wanted to update a few of you with it, with a nice brand name company that was trading at a discount. And of course, shout out to everyone in the Discord who jumped in that one for the longer term, and now you're up nicely. Now we're speaking about Campbell Soup, ticker symbol CPB, listed here on the New York Stock Exchange. Stock basically 47 3/4 here, hitting new 52-week highs today and even higher after hours. 47.79, sitting at 47.80 right now after hours. Spoke about this company on my birthday, August 30th, and we had earnings right around the corner, and I said, in my opinion, you can go back and watch the video, again, uploaded August 30th, 2023, and I said, in my opinion, the EPS side may be more heavily weighted by the revenue side, so if the EPS comes in light, we might see a drop, and obviously, if they're both beats, then you can see a big run-up, and what happened here when we look at these returns? You can see that the company beat on the revenue side with a very slight miss on the EPS side. And I think they said also that, it might get rough for the next couple of months or the next quarter. So what happened? The stock immediately popped up basically to the moving average of about 44. If you go back to the video, I think I was looking for like 44.70. Maybe like that fib level it was going to retrace to. But as you see, it basically ran up to that 20-day moving average and then immediately gave it back and dropped right back to the apex of this descending wedge that we spoke about. So you had the initial pop up on the revenue beat, but then it got weak again because, in my eyes, of that EPS coming in light, which is kind of basically what I was kind of saying in that video. But then you can see we dropped back into the apex, and technically it wasn't the worst quarter in the world, so, wasn't the worst quarter in the world. So what happened? We dropped back down into the wedge, and then we start climbing up, and we retest that trend line at about 44, and then we drop down. We got the dividend date coming out. We keep the stock down. Then we start gaining a little bit of momentum here going into next quarter's earnings. Now we have the opposite. We had a nice beat on the EPS side with a tiny, tiny miss on the revenue side, but because they were looking at the profitability of these food and beverage stocks because of hyperinflation and it being passed on to the customer and eating away at the profit margins. That's why I said, in my opinion, I think the EPS might be a little more heavily weighted on something like CPB as compared with their revenue. But you can see, boom, we spike up. We're back above 45.5. We're kind of bouncing around. I spoke about this key level here. If we closed above it, we were going to see a spike back up, and we actually ended up breaking down, and then we had the explosion back up to 45. So this is why, again, I say, obviously, if you have the capital, in my opinion, shares much more advantageous over time than trying to time options, right? Because it's really just unpredictable. And even times when we close above a support level and the stock should bounce, you'll have a breakdown or they'll randomly get downgraded or something. So this is why sometimes it's very, very difficult to try to time the time frame of the move for an options contract, which is why I say, and I know it's hard for a lot of people out there who have smaller accounts, but this is why I say, if you're looking at a situation and you're seeing a descending wedge and, over the next couple of weeks, we might pop up and break out, so you want to buy some calls, in my opinion, you should always try to buy more time. Are you going to make less of a return? Yes, technically, because you didn't time it, for that immediate day or that immediate week, that immediate weekly option. But at the end of the day, if you can kind of try to secure the trade with enough time to allow the move to happen, that then more times than not, you're going to end up being up on the position where you can secure profits and consistently grow the account, increase buying power, right? Take the extra profits, in my eyes, roll it into actual shares of smaller growing stocks, or like we said, some income ETFs, whatever. But Campbell's, after that run up here, as you see, had a nice beat there on the top and bottom lines. Stock started climbing steadily back up to about 47, drops back down going into these earnings, which again was another beat. And this is why I say earnings are rough, right? Because we had a company here with another beat, and you can see that the stock dropped and went from 44 down to about 42 after they beat earnings. And a lot of people may have bought calls, saw that the stock beat, and then were flipping out that they didn't make money on the calls, and now they got to take a loss or let them expire worthless. And then what happens? They wash out the short traders who just wanted some action that day or that week. They wash them out. We drop it instead of popping it. And then what happens? We rise back up, we dance around the trend line, and then boom, we pop up and we break out. So everyone on these dips here who had a little bit more capital than you, if they bought shares, they're sitting pretty right now. If they were able to buy options with, 3-6 months of time, they're sitting pretty right now. You, who had a little bit less capital and just wanted to roll the dice, get involved, and, just try to see if you can hit it big, you ended up taking a loss because they dropped it after a beat. Meanwhile, it's technically a winner, and we're sitting here now at new 52-week highs. So again, I know it hurts, I know it stings, but Campbell's Soup, even throughout all the pops and drops, I basically said in my opinion that I liked it in the numbers. I felt it was undervalued here at this level of about 42. Now we're at 48. Are we talking 11 months ago? Yes, but again, this is Campbell's Soup, not necessarily a trader's stock. In my opinion, more of an investment stock. And we're basically back to that initial level where we dropped and gapped down from about 50 back here in June of 23. And I said, in my opinion, over time, if revenue stays stable, we should really start to climb back up and fill that gap, and we could potentially get back to that $50 level if numbers stay steady. And now what we're seeing here in the news is that over the last couple of weeks, the stock got upgraded a little bit. They're talking about Rao's sauce. Campbell's Soup shares rise after JP Morgan upgrades to overweight from 45 to 52. And a lot of other people upgraded as well. Campbell's Soup maintained at buy. D.A. Davidson from 47 to 49. And you can see everyone kind of upped their price targets by, a dollar or two here and there. Campbell's maintained at equal weight by Wells Fargo, maintained $47 a share price target by RBC Capital. Right now you can see all these analysts, they were a little late on the rebound and on the call, but, technically they're all pretty much right now. Food companies still paying the price for years of inflation, right? That's what I was talking about. That's why they've been beating up some of these stocks like the Hershey's and the Campbell Soups. But if revenue stays steady and they come in above estimates, they can't be denied. Can't keep a good man down. That's what I always say. TD Cowen raises Campbell Soup price target from 44, from 44 to 46. Stevens adjusts price target from 50 to 51. Wells Fargo from 45 to 47. Bernstein price target, from 46 to 47. And this is what I mean, now after a couple of steady quarters and all of a sudden it's not as bad as it seems, now everyone's like, oh no, this is overweight, this should be growing, this is undervalued. JP Morgan, I know, was citing a new plan to increase margins. A new plan to increase margins, so that's why they increased their price target, brought it back up above the 50s, and in my opinion, I agree, which is kind of our original analysis all the way back here, August of last year, is that, again, over time, if they remain steady and stable, they're probably going to slowly climb up, fill that gap back to 50, and they're going to pay you a dividend the whole time to own it. Not the most exciting story, but we do have potential to be right, and maybe you can make yourself, 15-20% over time with a little dividend, and it could potentially work out for everybody. But let's switch over and look at it on stock charts real quick, and I'll let you guys go. Sorry, I've been choking today. But we can see basically similar story, just like with PM, right? We went on this big run up. We broke out now to these new highs. Now our RSI is potentially being tested above this benchmark, sitting here at about 72 and 2/3 on the daily. We're well above the top Bollinger Band. You can see the trumpeting beginning to take place. The MACD has been crossing here about a month ago, and the stock has been on a steady up and up, and now had the pop up. MACD almost spiked basically straight up. But again, just like PM, we could potentially have a little bit of a cooling situation here. On the longer term time frame, on the weekly, you can see RSI still sitting here sub 70, sitting at about 66. So we could maybe pause for a day or two, but also at the same time, if we pop up again to like 48, 70, and then we start, selling off and giving back, it would make a little bit of sense to me. But technically, on the longer term time frame, the stock does have a little bit of room to go. So that's why, what's today? Wednesday, right? So yeah, I mean, it could pause maybe tomorrow, but to close out the week, it could potentially pop up again, and we might even see, even if it kind of pauses tomorrow and Friday and doesn't continue for this week's candle, we could see a pullback kind of to the top Bollinger Band here of the low 47s, and then Monday, Tuesday, we can see a pop up to 48.5, 49, hitting new highs, bringing our weekly RSI to that 70 plus benchmark, and then we can potentially call it the top of the top and start to get back into that sell-off mode, because we technically have been kind of on the up and up here for quite some time. So you can see here also on that big drop when markets were pulling back as well. You can see, look at that RSI dropping to sub 30 on multiple occasions, and then boom, just going on a tear. So right now, both of those stocks do seem to be on the up and up, but just wanted to do a quick update, just talking about that Buffett method, that Buffett strategy. And yeah, that's pretty much it, because I probably talked for longer than I wanted to. So I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up, algorithm, right? Helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky, they're volatile, they are very uncertain. So I do want to wish all of you success. I hope everyone makes a couple of dollars. Thanks for your time. Have a good day.